Well, if I want to get fancy with titles here, I'm going to call this Bitcoin analysis the good, the bad, and the ugly. Good morning, guys. It's Keith Allen, and let's dive right in to what looks good. Look at this beautiful, large green monthly candle. Okay, we've had quite a few of those actually since back in September. We've been on a steady monthly climb here, and gosh, that's pretty solid, no doubt about that. But this obviously opens the door to a lot of questions. We have resistance right up here in this 51.5K range. We are still above the 0.618 fib, the golden pocket, which is, in my view, very, very good. That said, well, let's just kind of drill this in down by time frames and see what we can reveal. Okay, so now on the weekly time frame, we're now looking at the first red candle we've seen in a long time. Weekly close coming up, actually monthly close, I should have mentioned. Remember, we have a short month, right? So the monthly close is coming up on Thursday. And that, I think, is going to be important for a lot of reasons. We'll get into that in a little bit. On the weekly time frame, we're looking at a red candle at the moment here, right? So that would be what was the weekly close last week? Was it 52.130, right? So we've kind of lost this level. We were above 52 and starting to come down a little bit. I want to take it back to the monthly here for a second here. What would it take to turn this into a red candle? And let's go ahead and put the moving averages here, and this is going to kind of paint the narrative here in terms of what I'm watching for here in terms of key levels that could come into play here pretty soon. So again, monthly are to go red from last month, we would be at 42. Well, we closed at 42,558 last month, right? That's a really interesting level, and we've talked about that, and I will show you why that's a really interesting level here. If we go to our daily, we can see that this was pretty important. That 42.5 level, well, that's right here, kind of around the bottom of the golden pocket, between bottom of the golden pocket, 0.5 fib, and where the 100-day moving average lives right now at the moment. So we had a lot of support here in the past. So that's significant. That could be a key level if things break down from here. Back to the weekly, right? So looking as good as this looks and to be above, I also think it would be very good to see a retest here, right? I think that would be a validator for the RS flip, and that would be a good foundation for another leg up, as would any of these levels down here that I was mentioning here on the daily time frame here. I think that each of these levels roughly could be a potential landing zone. Yes, even this one all the way down here if things really get ugly. So let's not rush into that. Let's take it down to a 4-hour chart, and I'm going to clean up the moving averages here a little bit to make it a little easier to see what's going on here. On the 4-hour chart, you can see not only that we have been bouncing off resistance here, that we have a series of very close, initially what looked like could be a double bottom. And, typically when we see double bottoms, price likes to move from that, but momentum kind of fizzled out here. So still have resistance, strong resistance in this area up above. We did make one higher high here. That's a positive. We'll put that in the good column. In the bad or the ugly column is that this was a ever so slightly lower low. So we were going here. We had a high. We had lower lows. We made a low. Then we made another low. This one wasn't as, this was a higher low, so this one was okay. And we got this higher high here. But then this higher high quickly turned into a lower low, and that was a little bit of a concern. We'll put that in the bad or the ugly department. What would be really ugly is if from here now we make a lower low from here. When you start getting into a sequence of lower lows and lower highs, that's when you need to be concerned. Coming into the weekend, of course, we have the ETF faucet turns off. So if ETF demand has been driving price and keeping price elevated, when demand turns off, then there's an opportunity for price to pull back more. So, it's what we've been seeing so far, and we'll look at fire charts here to see this, is that this is on the daily time frame now, that there's been some distribution coming into the opening, really from all classes here. But, this red class, which I mentioned the past few days, seems to be on not only just an aggressive TWAP schedule since Christmas, but I'm really starting to feel like that might be one of the actual ETF entities that's making that happen. So something else notable, and this really just happened in the order book. Look at this. You can see it here on the monthly time frame, but we can also see it as we drill in. This was that key 48K level, and look, a big block of bid liquidity just moved down to the 44K level. We looked at those levels and, already identified that they were significant when we were on the daily chart. And so let's here's that 48K where we had support, and now it just moved down to the 45K level, where we have some, that was really where our prior RS flip came from. We were up here for, quite some time, since early December, until we actually manufactured a solid breakout here. That was our first attempt. So that 45K level is significant to me, especially if this doesn't hold. If we have a wick even into this golden pocket, to me, that's a sign of potential weakness. So I will be looking to see if we get a retest that comes here and gets a solid bounce, or if we get a little bounce, momentum peters out around the 50K line, and then we grind our way back down into here. So that's really what I'm looking for in terms of, seeing if price is going to break out here or break down. Eventually, we will get this breakout, but I don't think that we can put a time frame on it. I don't think we can say, oh, by Monday it's going to happen. I don't think it is going to happen. I think we really need to watch where liquidity is going. And right now, liquidity is starting to stack above us. That's resistance. And it's starting to fade back down lower. Okay. So let's go into a shorter time frame here. You can see it very clearly here on fire charts. You have liquidity stacking, ask liquidity stacking at 52K, and you have, as I just showed you, some of this bid liquidity at key levels starting to fade back a bit further. Look at this. Let me expand the chart so you can see it clearly. You can see that this block has moved, boom, right down here to the 44K line. So that's what I'm watching. I'm watching to see where this liquidity moves over the weekend. If price drops down below this 50K level, right? You see how thin it is right here? Price moves very, very quickly. It can move very, very quickly through these. That was easy for me to say. Price can move very, very quickly through these darker zones. Very little liquidity there, very little friction to slow things down. So as price nears these levels, if we see some bid support come in, that could slow things down and potentially, create a guardrail. If we don't see support come in, we could go down and visit this level and even lower. So how low could we go? Well, this pocket of bid liquidity down here in the 35 to 38K range is still very, very valid in my opinion. I don't think it's super likely that we're going there fast. But I'm watching this level by level. So if you're watching liquidity, you can see where it's moving. If you're watching the charts, you're really just looking to see if we make lower lows and lower highs, or higher highs and higher lows. It's as simple as that. Lower lows means things are going to break down. Lower highs means things are trending that way. So I'm really watching right now very, very closely this right here. We break this line, I think there's a real good chance we first hit 50, which is psychological in my opinion, and then go back and test this. If this doesn't hold, then I think we're going to grind down to that 45K level. That's just my opinion. None of what I share with you should be considered trading advice. Trading is risky. Do your own research and manage your risk. That's the name of the game here, risk management. Risk management will keep you in this game for longer. Hope that helps you keep an eye on the market as you head into the weekend. Hope you have a fantastic weekend. And as always, trade safe, my friends.